The markets are a little rough right now. I've got stocks in the garden that are down 10, 18, 29%. Even one in my growth portfolio is down 41%. When investments do well, it's a celebration. But seeing your investments in the red can be hard to stomach. The idea that there's now less money waiting for you than what you've worked to save is not the best feeling in the world. Do you hang in there and hope for a turnaround? Or do you get out now before the damage gets worse? Today, I'm going to share my simple rule that, as a dividend investor, can help you through any thrill ride your stocks are about to climb aboard. Hey folks, Dividend Gardener here. Welcome to Dividend Gardening. Here's my rule. Give your stocks a job. When I started investing, I thought of my stocks more as a collection. I wanted exposure to this sector, and hey, this looks like this is undervalued, so I'll add a few of these shares, and so on. The problem with this approach is that you don't have a confident answer for all the what-ifs that could potentially happen, and we're long-term investors, so there's going to be a lot of them. Instead, think of your portfolio as a company, and guess what? You're the owner and the chair of the board. Now, your company needs a mission. Figure out what that is, and then build your staff so that they're the best team for the job. Maybe you have a few positions you want to fill, but how do you do that? Chapter 1. The research is the resume. So when you hire your stocks, are you just going to choose one at random, sight unseen? No, you're going to want to see some credentials. As much as do your due diligence is cliche, it's absolutely vital to the process. What kind of revenue, net income, free cash flow, and dividend growth has the company reported over the past 1, 3, 5, and 10 years? How much debt does the company hold? And is it doing a good job of paying it down? What's the return on equity? These are just a few of the many questions that you should have answers to during the interview process. And as nice as it would be to just hire based off of referrals, don't do this. A good stock for someone else's portfolio doesn't necessarily mean it's a good stock for yours. Always know the stocks you're hiring. Chapter 2. The executive team. This is a reframe of the core satellite strategy that you might have already heard about. When you're building out this team, some of these stocks are going to be the company executives. These are the ones that lead your departments, they make up larger percentages of your portfolio, and they're the ones you're most focused on building your positions in. So if we pulled those examples from before, maybe your director of income would be a reliable dividend payer with good fundamentals and a solid moat. Your senior VP of consumer staples could be a stock with a much lower starting yield, but one that has a track record of continued growth and a strong set of brands that you yourself trust as a consumer. And then, hey, who invited the speculative stock to the executive meeting? You could also make the case for a passive index fund to be in that core executive team as well. Perhaps you've got a dividend ETF that covers a wide range of sectors and the overall market that acts as your CEO. And in this analogy, the satellites are the rest of your staff, so to speak. They're still a part of the team, chances are you're still reinvesting their dividends, and maybe you'd add more shares if there was a compelling opportunity, but they work in a supporting role, not leading the way. Chapter 3. The elevator pitch. If a friend saw your portfolio and asked you why you're still invested in a certain stock, could you sum that up in a sentence? One that isn't, I don't know, I just bought it when it was low and the price went up, but I don't know when to sell? Every stock needs a reason to be in your portfolio. And if every stock has a job, you can easily articulate why it's still there. This also helps you in a market downturn. Even if the stock is down, ask yourself, is this stock still doing its job? If the quarterly review looks good and it's still paying your dividend or growing the dividend or whatever it's in your portfolio to do and do well, then don't lose sleep over the share price. Companies are not their stocks. That is to say, the share price isn't a literal reflection of a company's finances from minute to minute. This is why sometimes stocks are undervalued and sometimes they're overvalued. Chapter 4. The HR department, or when to let stocks go. So we're not panic selling anymore, but what if it really is a good idea to sell? If you go through your portfolio and find that one of your stocks isn't doing its job, then it's time to consider letting it go. Did you hire this stock for dividend growth and it cut the dividend? Did the company completely change its focus to something you're not confident will work out?
What happened to you, man? Used to be cool.
I'm still cool.
Nah. You've changed, man.
Or have recent earnings reports consistently disappointed you and you see a better opportunity somewhere else? Those could all be valid reasons. And don't forget, the job you give a stock can be project-based or temporary. Perhaps you bought a stock for growth within the next 5 years, and a few years later, it's at a point where it's doing so well that it's way overvalued from the company fundamentals, and you're up more than 50%. If you've set those parameters at the beginning, that this isn't a forever hold and that you'd sell at a certain percentage of gains and a certain percentage above its intrinsic value, selling actually becomes an easy, guilt-free decision. Which leads me to my next point: never look back. Your previous employer isn't out there constantly checking your LinkedIn to see what kind of accomplishments you've achieved at your new job that they can't profit from anymore, and if they are, that's weird.
Stop it. Get some help.
Likewise, don't do this with stocks you sell. You had a reason for selling, take the stock off your portfolio tracker and focus on your new focus. If you enjoyed this video, I'd really appreciate it if you planted a like on it. Just to be clear, I'm not a financial advisor, I'm just sharing my own insights based on my own experience as a dividend investor. This video is for informational and entertainment purposes only, and it might be outdated or inaccurate, so always do your own due diligence or seek the advice of a licensed financial professional. Thank you so much for watching, happy dividend gardening, and we'll see you in the next video.